B. Administer bank accounts, including bank fee analysis and signer management, and maintain documentation. Bank account administration is a core treasury responsibility because organizations rely on bank accounts to manage collections, disbursements, liquidity, investments, and financing activities. Treasury professionals oversee the opening, maintenance, modification, and closing of bank accounts to ensure operational efficiency and compliance with organizational policies. Effective account administration improves cash visibility, strengthens internal controls, and supports efficient payment and collection processes. Treasury teams coordinate with financial institutions, accounting departments, legal teams, and operational units to establish appropriate account structures aligned with business needs. Organizations often maintain multiple domestic and international accounts to support regional operations and liquidity management strategies. Proper oversight of bank accounts reduces operational risk, improves transaction accuracy, and supports effective treasury governance throughout the organization. Bank account structures must align with organizational liquidity objectives and operational requirements. Treasury professionals evaluate account types such as operating accounts, concentration accounts, zero balance accounts, payroll accounts, investment accounts, and foreign currency accounts to support efficient cash management. Centralized account structures may improve liquidity visibility and reduce idle balances, while decentralized arrangements may support operational flexibility in multinational organizations. Treasury teams monitor account usage, transaction volumes, and balance activity to identify redundant or inefficient accounts that increase administrative complexity and banking costs. Maintaining accurate account inventories and standardized procedures improves operational consistency across business units. Effective account administration supports stronger cash positioning, working capital management, and operational efficiency while reducing exposure to fraud or unauthorized activity. Bank fee analysis is an important treasury function because organizations incur charges for account maintenance, transaction processing, wire transfers, lockbox services, liquidity management tools, and other banking services. Treasury professionals review bank account analysis statements to evaluate fee structures, transaction volumes, earnings credits, and pricing competitiveness. Detailed fee analysis helps organizations identify unnecessary charges, optimize service usage, and negotiate more favorable banking terms. Treasury teams compare banking costs across providers and benchmark pricing against market standards to support cost-effective relationship management. Organizations may also use compensating balances or earnings credit arrangements to offset banking fees. Effective fee analysis improves transparency, reduces operating costs, and strengthens overall treasury performance through more efficient utilization of banking services and financial resources. Signer management and authorization controls are critical components of bank account administration because they protect organizations from fraud, unauthorized transactions, and operational errors. Treasury professionals maintain records of authorized account signers, payment approvers, and electronic banking users to ensure proper segregation of duties and control over financial activities. Signer authority levels are typically aligned with organizational responsibilities and transaction approval thresholds. Treasury teams regularly review signer lists to remove former employees, update authorization changes, and ensure compliance with internal governance policies. Dual authorization requirements, secure authentication methods, and restricted system access further strengthen operational security. Effective signer management reduces financial risk and supports regulatory compliance by ensuring that only properly authorized individuals can access or transact on organizational accounts. Maintaining accurate and complete banking documentation is essential for operational efficiency, regulatory compliance, and effective audit support. Treasury professionals manage documentation related to account opening forms, resolutions, signature cards, tax forms, service agreements, electronic banking contracts, and know your customer requirements. Proper documentation ensures that banking relationships remain legally valid and operationally functional across jurisdictions and business units. Treasury teams also maintain records supporting payment authorizations, bank communications, fee agreements, and account reconciliation activities. Organized documentation improves audit readiness and facilitates efficient issue resolution when operational or compliance concerns arise. Treasury management systems and centralized document repositories help organizations maintain secure, accessible, and up-to-date banking records across global treasury operations. From a CTP examination perspective, candidates must understand the operational, control, and governance aspects of bank account administration and documentation management. Exam questions frequently assess the ability to analyze bank fee statements, evaluate account structures, identify internal control weaknesses, and recommend authorization or documentation improvements. Candidates should understand signer management procedures, account analysis reporting, fee benchmarking, banking documentation requirements, and segregation of duties principles. Knowledge of operational risk management, compliance requirements, electronic banking controls, and centralized account management is also important for Treasury decision-making. Treasury professionals must recognize how effective account administration supports liquidity management, operational efficiency, and fraud prevention. Mastery of these concepts enables Treasury professionals to maintain secure, compliant, and cost-effective banking operations.